President Bola Ahmed Tinubu has hailed corporate Nigeria citizens and other stakeholders in the Nigerian capital market for surpassing the 100 trillion naira milestone on the Nigerian exchange. In a statement issued last Thursday by his advisor on information and strategy, Bayo Ononuga, Tinubu described the record achievement as an inspiration for the investing public operating in the money and capital markets. He urged Nigerians to deepen their investments in the local economy, assuring that 2026 will yield even greater returns as his administration's economic reforms continue to deliver stronger outcomes. David Adeoye, a chartered financial analyst, is a director at Quartus Economics, an economic, strategic, and transaction advisory firm based here in Lagos. He joins me now to have a quick chat around market capitalization. Good to have you on the program, David.
Good afternoon.
You are welcome.
Thank you very much. Same here. Good to have you.
Very, very quickly. There's been a lot of chest beating around market capitalization reaching 100 trillion naira. And the government has been saying, oh, this is very good news. This must be celebrated. Is the celebration worth it? Is it sustainable? Is this a true boom in the real sense of it, or something that will burst, somewhere down the line? There are claims made by Mr. Ononuga, but I'll come to that shortly. But let's start. Is this celebration worth it? What does it mean, particularly for the ordinary Nigerian?
Okay, thank you, Dr. Abati. When we look at matters like this, there is always the objective perspective. And then we're looking at the numbers. Numbers convey a particular concept or variable. So in this case, what we are seeing is market capitalization has crossed 100 trillion naira for the Nigerian stock exchange, for the Nigerian exchange. Now, what does that mean in reality? Market capitalization is a concept that means the number of stocks multiplied by the price. So it's an aggregate concept. It's an aggregate variable that measures the level of not just activity, but where the market stands at a particular time. So how is that derived? If company A has 10,000 shares listed, I'm using that as an illustration, and each of those shares is trading at, say, 2 naira, then the capitalization for company A becomes 20,000 naira. Now, if you do that for all the companies on the exchange, you arrive at the aggregate market capitalization. Now, for us to put this in context, it's good to ask, where was this market 20 years ago? Where was it 10 years ago? That can give us a clearer view of what we have achieved or where we stand today. So, as at 2005, this market was on 2.7 trillion naira. Today, it is over 100 trillion. That is times 37, or 37 times as big as it was 20 years ago. Now, in 2015, it was 24 trillion, meaning it's now 4 times what it was 10 years ago. So sometime last year, it was around 95 trillion towards the end of last year. And then, as we enter 2026, it crossed. So this means that, okay, our market has grown in leaps and bounds. Now, we can't get carried away because part of this growth also reflects inflation and the weakening of the currency, which inflation suggests. But what does it mean at the fundamental level? One, it shows that investors are more confident about the country. Let me share a little folktale, or some excerpt from a folktale that we all used to know. There was a time the Lion King was ill, and different animals were being asked to, please, can you come, pay homage, say hello to the king, he's ill. And then the tortoise went to see the king as well. And the lion said, okay, my friend tortoise, you are so dear to me. Can you come inside? The tortoise said, I'm here at the door. I'm just here to come and say hello to you. I'm not here to come inside. And he said, why? And the tortoise said, well, all the footsteps I can see point in one direction. They are all going inside and none is coming out. So when we talk about certain market variables, the key point is that they serve as a signal. So when people are bringing money into our economy, because beyond local investors, we also have data that tells us that between 2024 and 2025, the level of participation of foreign investors on the Nigerian exchange moved from less than 20% to about 27%. Now that means the global investment community has more confidence in the Nigerian economy today than it had 12, 13, 15 months ago. That is good news for us. It's also a signal of confidence in the currency, because when you invest in a country, you are also investing in the currency of that country. The NGX, as we know it, is still a naira market. It's not a dollar market, as it were. So people are taking the risk on the naira, both Nigerians and foreigners. And if you understand the slides or the trajectory of our currency in years past, you will notice that people were using the dollar as a safe haven. That if you don't want to lose money on your money, better convert it to dollars. But we are seeing the reverse now. We are seeing people coming into the naira with strong positive sentiment. So that's a plus.
What I seem to be hearing is that the celebration is justified. That Mr. Ononuga is right in the statement that he issued on behalf of government that foreign direct investment will be attracted. Now, what is this foreign direct investment? Is it FDI or portfolio investment? Good. FPI.
Good.
So what are you saying we should celebrate?
Okay.
Is it FDI or FPI? All these tales about tortoise going to the lions. I'm from a city. I'm not as knowledgeable about this like some of you from the village. Can you break it down for those of us from the city?
So the moral of that story is about signaling. So investors may not know they may not see all the details, but signals matter. Now, these are not manipulated signals. Let me clear that. This is so when you talk about the market capitalization, it is the aggregate of decisions made by thousands, if not millions of investors. So what does this mean for us? The funds that come into the capital markets is usually foreign portfolio investments. But this is the question. Now, we'll be making a mistake if we equate that to foreign direct investments. We also need to be clear on that. So foreign portfolio investment coming in and staying for some good time is a signal about the government, about the country's macroeconomic environment. Now let's go to FDI. And with this, I want to come to what the data on market capitalization is not saying. For example, it doesn't tell us much about poverty levels in the country. It doesn't tell us much about the purchasing power of the average Nigerian. But it's also important that we understand that purchasing power, well-being, poverty, and all the development indices, they respond to something, which is the level of productive activity in the economy. So we still need FDI, no doubt, and this is the difference. If I come in as a foreign direct investor, I come into Nigeria, build a factory or set up a service center, something that involves either brick and mortar or click and portals. I make concrete investments put on ground. It's difficult to just wake up one day and say, I'm leaving. But for portfolio investments, it's not always like that. Now, this is also the risk with portfolio investments. If we get to a point where the policy environment begins to change or show signs of stress, some, not all, some of the investors may panic and decide to exit the market. That will affect the capitalization. it's also important to point that it's a dynamic variable, it's not a static variable. But having said that, it's still a positive that where we are today is times 4 of where we were 10 years ago and 37 times where we were 20 years ago.
Okay. I know Roti Sudiri, who covers our business beat, reminds us of that regularly, that the Nigerian stock exchange capital market is doing very well. However, I've also read another report, the Billionaire Exchange, published by ProShare. I think Femi Awuyemi wrote that. Yeah. And they were saying that, look, there's nothing to jubilate about, because this capital market gains that we're talking about is in the hands of just about 5 persons who control about 37% of the market, so-called market capitalization, and that there are problems of liquidity in the market, and that, you know, it's of no advantage to the ordinary person who wants to go to that stock market. So there's liquidity, there's false representation. I think that's the major argument in that essay titled The Billionaire Exchange. In other words, he was saying in that piece that the old stock exchange that we are celebrating in the hands of Abdulsamad Rabiu, Aliko Dangote, Jimovia, Tony Elumelu, and Femi Otedola, and that there's no scope, no space for flotation. So there is just 5 billionaires controlling the whole of the Nigerian economy. What do you have to say to that?
Okay, yes. So I think it's good we dissect that fact and understand it in proper context. Number one, I will say having a country's leading billionaires invested in the stock market of that country is a positive. Because it could happen the other way around, where the bulk of investment of the country's wealthiest individuals is outside of the country. So that would be my first take on that. Second is, when we look at this list of billionaires, I look at the Nigerian economy from 2 angles. We have the enterprise and we have establishments. So you have, these guys are people who have literally built enterprises, much of it from scratch. If we have, are we better off having more of individuals like this in the economy? I think the answer will be a strong yes. So part of what we need to do in Africa, and you'll see that Abdulsamad Rabiu and Aliko Dangote are primarily manufacturers. Now, that is one of the major things that is lacking in our economy. In Africa, and Nigeria in particular, we seem to be weak when it comes to the culture of making things. I mean, manufacturing, making things at scale, large scale manufacturing. And you can see certain things around, okay, the Dangote refinery, there were issues of unionism is a fundamental right of workers, but we need to be careful such that the establishment mentality with which we run the refineries does not get translated or transported into running a private enterprise. Now, so the point I'm making here is, to the extent that these are individuals who built, nurtured, and operated massive enterprises, we can trace their wealth. So I would say that's also a positive. Now, you mentioned the issue of flotation or free float. Now, when it comes to free float, we need to check what do the regulations say. Because if the regulation allows me to float, to put on this, to list just 5% of my company's capital, and I feel comfortable with that, fine. But should the regulation say you cannot list anything less than 20, 30, or 40% of your company's issued share capital? That's a different conversation. So I think what we have there is perhaps a situation where the regulations did not foresee that we may have this challenge.
Okay. That leads me to the next question. Are you saying, therefore, that the problem of illiquidity in the Nigerian capital market is as a result of the negligence of the Securities Exchange Commission.
Well,
the regulatory failure, more or less.
I won't call it negligence.
Because, regulatory failure.
Yeah, well, it may not even be a failure.
Absent-mindedness.
Or gaps. Let's address it as a gap. In the sense
you
that...
don't want to use
the
exact words.
No. I call it a gap because, like the Holy Book says, we know in part and we prophesy in part. So I will look at it from, okay, at the time the regulations were made, were certain things foreseen? If they were not, or are they considered harmful? It's also a case of doing a proper diagnosis of where we have found ourselves as a country, as a market today, and saying, okay, we want to deepen this market. We want to enhance the liquidity at the market level and of the individual stock level. And therefore, this and this need to be made available. Now, let me also say that if it happens that someone, an entrepreneur, issues or offers shares to the public for sale, and only part of those shares were subscribed, clearly the entrepreneur has the latitude to retain what was unsubscribed. So I will say that, yes. Now let's use a similar example. Let's look at banking. On two major occasions now, we've seen the central bank step up to say, based on the needs of the economy, the level of capitalization has to change. And we saw it with Soludo in 2004, running into December 2005. It changed the face of the banking industry. We are seeing it again with the current CBN leadership. So I'm saying that if based on an assessment, based on a proper diagnosis of the issues of the gaps in the capital markets, the Securities and Exchange Commission decides that, okay, this is the next thing that needs to be fixed. That can happen. Yeah.
Okay.
Let me also say that Nigerians are not precluded. The ordinary Nigerians, they are not precluded from participating in the stock market. But if they come in at this level of liquidity, it will drive up prices even further.
Yeah, okay. Can anybody even invest up to $50 million in this same market? Now, there were some claims made by Mr. Nonuga in his statement. He was saying that the Nigerian capital market is doing better than the S&P 500. And I had in the course of the week to query that. I said, no, that's not true. Because we deal with the, with economy, business issues every week. He says it's better than FTSE 100, and that we are even doing better than our peers in emerging markets. Is that true? Are we as strong as even something as close at home as the Johannesburg Stock Exchange? So, because some of these claims need to be clarified. You are a subject area expert.
Okay, so in terms of, now let me put it this way. If we have different stock markets that we are comparing, we also need to be clear about what indices are we comparing. Are we looking at the all-share index? Are we looking at the year-to-date returns? If it's the year-to-date returns, I think yes, Nigeria has outperformed many markets in developed markets. Sorry, many stock markets in developed countries.
We're a smaller market.
One, we are a smaller market. We also need to look at our base, and we need to look at the structural issues. Is there a currency-induced correction in the markets? If we put the two markets at beginning of period, end of period, and convert to a uniform currency, a stable currency, do we still get the same results? So I will say, one, the currency in which we are measuring matters. It's not about whether the naira is stronger than the dollar, or whether it's not about whether the naira is performed better than the dollar during the period. So when we're looking at two stock markets, there's what we call market return, and there's what we call currency return. So if we adjust for the currency return, it may give us a different picture. But we also need to be clear, what indices are we comparing? Now, we know that for Nigeria, there are also issues of concentration, which I think we should not overlook. So if we consider, for example, only 4 sectors control 79% of market value in 2005. Consumer goods, ICT, industrials or manufacturing, and then banking. Now, of all the companies, quote, listed on the Nigerian Stock Exchange, only 23 of them accounted for 88% of market value by mid-2025. Now, this is indicative of something. The concentration you mentioned earlier is not just around the 5 billionaires, it's also around activity and value within the market. But those are things for us to step back and look and say, okay, how can policy respond to this? How can we institute measures? Yes, what we are seeing today is good news. We are better than where we used to be. But we also need to bear in mind that for between 2013, 2014, and up to 2022, 2023, the economy did not grow. And when the economy lags, the stock market also lags. So it's also good to ask, if we are 37 times where we were 20 years ago, and we're only 4 times where we were 10 years ago, I imagine you can see that gap. That if it was 37 times 20 years ago, then you expect maybe 8, 11 times 10 years ago. But just being 4 times, it shows something. There was a time when growth did not happen. Okay. Now, I will use this metaphor just a few seconds, sir. I will use this metaphor that if a patient has been in coma for a while, when that patient begins to blink and then fingers begin to move and you can put a hand across the face and you are getting responses, the person begins to smile. It's time to give thanks.
Okay. Let me ask you this as a kind of follow-up.
Okay,
I started by asking you about the ordinary man.
Yes, sir.
Who wants to invest in the stock market. We seem to have an oligopoly in the capital market. The capital market of Nigeria is in the hands of a few.
In terms of what, sir?
Only 3 of the top 10 companies control about 30% and above of that, stock market. The ordinary people, which ordinary man can go and invest in the capital market today and expect, huge returns?
Well,
you are talking of FDI, you are talking of FPI, and all of that. My concern is, how does this translate into an advantage for the ordinary man?
Okay, so let me...
So that we can spread prosperity.
Yes.
After all, the government talks about prosperity. But the prosperity is in the hands of less than 10 companies.
Okay, so now, the prosperity being concentrated among a few companies, we may not be able to help that. But what we can help is how do individual investors allocate their funds. We've seen several cases of Ponzi schemes in this country. So we need to be clear what is the risk appetite of the average Nigerian investor. Now, in terms of market access, the average company listed on the stock exchange, if anyone talks to his or her stockbroker, you get the stocks to buy. It's simply about, 1, having the right financial advisor and having the right stockbroker to assist with the process. So I would say the opportunities are available, and the Securities and Exchange Commission from time to time encourages Nigerians to take advantage of investment opportunities on the stock market.
But there is, insider trading. There is, information allocation.
Asymmetry.
Yes, and all of that.
Well.
So which, pushes out most of
for insider trading,
the ordinary people.
Is still against the law.
That's why I asked you about SEC, the regulatory authority.
The regulators are very strong on matters of insider trading or other unlawful investment or trading activities. SEC is very clear on that. But we also need to look at the issue of investor education. How interested are the average investors? And many Nigerians invest in the stock market. Perhaps they don't make noise about it. So the stock market is still an opportunity, or still offers opportunity for investment to every Nigerian who is interested. But there needs to be appetite and there needs to be education. We've seen, there are certain examples, if we start going into details, where you find people more willing to invest in what you would call schemes versus investing in the markets.
Okay. David Adeoye, thank you very much. But I still have another subject to discuss with you, which is about the poverty index of Nigeria rising. You're an economist, you're a financial analyst. We'll take a short break. Okay. And after that short break, we'll come back and discuss that aspect of the Nigerian economy, having looked at the capital market of Nigeria. Welcome back to This Is Live, the Sunday talk show here on the Arise News channel. Still with me in the studio is Mr. David Adeoye, a certified, financial analyst and economist with Quartus Economics. Now, Mr. Adeoye, thank you very much for staying with us. Now, Nigeria's economy may be showing signs of stabilizing, but a new outlook warns that daily life could become even tougher for millions of citizens in 2026. A report by PwC Nigeria indicates that the poverty rate could climb to 62%, meaning about 141 million people may be living below the poverty line, driven by weak income growth, insecurity, and mounting fiscal pressures. While inflation is easing and foreign reserves are improving, the report cautions that without deep structural reforms, macro stability may not translate into better living standards for most Nigerians. Arise correspondent Frank Omolakwe reports.
May be improving on paper, but the reality for millions of citizens is expected to worsen over the next year. A new report by PwC warns that by 2026, nearly two-thirds of Nigerians, about 141 million people, could be living in poverty. The projection is linked to ongoing economic reforms, policy gaps, global shocks, and limited income growth. The report also highlights growing concern over Nigeria's fiscal position. The proposed 2026 federal budget allocates 58.18 trillion naira in spending against projected revenues of 34.33 trillion naira, leaving a deficit of 23.85 trillion naira. That's about 4.28% of GDP. Analysts warn this could further strain funding for infrastructure, education, healthcare, and social protection. With oil prices expected to soften toward $55 per barrel, government earnings and foreign exchange inflows may weaken further, while geopolitical tensions and global volatility continue to threaten Nigeria's fiscal buffers in 2026. Security risks also loom large, with conflict-related fatalities expected to rise in 2026 due to insurgency, banditry, and kidnappings, alongside instability across West Africa. Unemployment, the rate is projected to climb to 5.3%, but analysts note that the real challenge remains job quality, with more than 70% of Nigerians working in the informal sector, where wages are low and productivity is weak.
For this Makupo, nobody will help you if you don't get handwork.
For poor households, food remains the biggest pressure point. The poorest Nigerians spend nearly 70% of their income on food, meaning even small price increases push families deeper into poverty. While current reforms may lay the groundwork for long-term stability, experts stress the urgent need to ensure the growth translates into higher incomes, better quality jobs, and real relief for the most vulnerable. Frank Omalape, Arise News.
Okay, David Adeoye. Just the same point I've been trying to make. The rich getting richer, the poor getting poorer. And now, this report by PwC says more Nigerians are going to slide into poverty, 141 million people. And then we say just about 5 people, just 10 companies are making all the fortunes in Nigeria. that inequity, that inequality, that imbalance, and then the perennial problems that poor people face in Nigeria, lack of employment, inflation, and all of that. So how do you explain this?
Okay, thank you once again, Dr. Abati. Now, when we look at rising poverty, we started a study at Cotos Economics sometime last July, and our focus was what was happening to poverty across the world, across continents. And one of the first things we saw, it was as if poverty started migrating towards Africa between, say, 1990 and now. Africa was making progress at some point, but shortly after 2012 or so, when the commodity bubble burst, commodity prices went down around 2014, Africa got into deep trouble and poverty started rising. Now, for context, Asia pulled about 1 billion persons out of poverty over a 30-year period. But what has happened to Africa? We are seeing more and more people get into poverty. So we looked at all the data, we compared multiple countries, and in Africa we saw a pattern. There were 5 large economies, commodity exporters, and so on. Then we had another 7. The other 7, we call them the rising stars. This included Ethiopia, Kenya, Cote d'Ivoire, Ghana, Tanzania, and 2 other countries I can't remember immediately. But the big 5, Nigeria, South Africa, Egypt, Algeria, and then Angola. Morocco is also large, but we picked Angola because of the size of their oil exports. And what we found out is Africa has passed or has crossed that threshold where resources can make us poor, can make us rich. We've crossed the threshold of resource-based or resource-led prosperity. That's one mistake we are still making. We still look at our resources and we think, oh, because we have this, oh, we have oil, we have gas, we have solid minerals, we have agricultural land, and so on. Therefore, we are rich. Wrong conclusion. And somebody mentioned that prescription without diagnosis is malpractice. Or prescription before diagnosis, either way, amounts to malpractice. Now, Asia that is pulling people out of poverty, how are they doing it? Now, we look at our structural issues, but often we fail to look at our cultural issues. Asia has a strong culture of making things at scale, large-scale manufacturing. Africa is only beginning to develop that culture. And like we said, like I mentioned earlier, your Dangote refinery, your Isiaku Rabiu, and so on. Abdul Samad Rabiu. Those manufacturing conglomerates are leading a new charge in building a culture of making things. Let's look at education. In Africa, we tend to educate people to know. Asia tends to educate people to do. Such that in Africa, you find a situation where people educate themselves to understand, not to speak good English. So when you find an Asian in the room, you notice this. Their accent still carries their village dialect, but they understand what you are talking about. We have the fine accents, but our actions don't
Nigeria, show. All these girls who have never, who cannot even locate Murtala Mohammed Airport, they speak through the nose.
Thank you.
I know.
So
I know.
The essence of our education appears to be to get a white-collar job. But do we still have those jobs? Is the structure of our economy producing those jobs the way we ought to? Now, this is the thing. We came to this conclusion that as a country, once your population crosses a certain threshold, commodities can no longer help you much. People tend to think that, oh, it is the use of government revenues that drive poverty alleviation. No, it is productive enterprise. The less productive, the less enterprising we are as a people, the more poverty begins to rise. That's one. Then when you look at the demographics, how many billions of dollars or how many trillions of naira have we added to our GDP in the past 10 years? And then how many millions of people have we added to our population? You may also notice that poverty tends to, both poverty and headcount tends to multiply more around the lower segments of the pyramid than in the upper parts. So you find the rich having fewer children and having concrete plans for them. The poor, now traditionally, when the poor have more children, is because they have either enterprise or farms to deploy them.
No, it's also the
that
only
has
form
changed.
of recreation.
Exactly,
They
thank you.
cannot afford their television sets.
Thank you.
So they do their recreation in the bedroom.
Exactly. In fact, someone said these are countries that grow at night. Now, that was referring to a Nigeria, an India, a Pakistan, Egypt. When you check the population, and a bank like Goldman Sachs said recently that in 50 years' time, you will have Nigeria as number 5, you will have Egypt or Pakistan as number 6, and the other as number 7. And we challenge that to say demographic potential or promise does not equate to economic greatness. If it does, Japan should not be where it is today. So we are asking ourselves, culturally, are we productive as a people?
We are productive in the bedroom.
I agree. We are prolific in that area. Yes. We can be prolific in the other room, but we are asking that when it comes, because once it comes to production, a rule in international trade is this: what you don't make, you have to buy. And what you don't make, you cannot sell. So what we don't produce, we cannot export.
No, many of our children are jackpying. We are exporting them because we can't cater for them.
Thank you. But we still produce the children.
Caveat.
We produce the children first.
Yes, and then
we educate them to a level, and then we move them out. So our point is this: as a country, one, the focus of our education must change. We must begin to educate people to produce, not just to know. We must begin to educate people to be able to reason clearly, to create things. And I think some part of the younger generation is doing better than what we had 10, 20 years ago. But when you look at the millions of children we have given birth to, in fact, the tens of millions that we have given birth to over the past 20 years. Now, when you look at 2006 census, we were 140 million. Today, we are about 235 million people, meaning that we've added about 95 million people in 20 years or in 19 years. So we need to look at our demographics. Now, the regrettable part is this: the armed conflicts. We call it insecurity. We see it as plain criminality. And as a society, our tolerance for criminality, especially violent crimes, must come down close to zero.
Okay.
If we are going to address poverty.
Okay. David Adeoye, I would like to thank you very much for linking all of these issues. We should be productive. Yes, not in the other room.
Not just in the other room.
In terms of real activity.
Real activities. So that what we can sell.
The economy can grow and we can engage more positively with the international trade system. And also all the things you said about the capital market and how we need to deepen that market and open it up more in terms of investment. Thank you very much indeed.
Thank you
Great
so
pleasure
much.
to have you on This Day Live, the Sunday Talk Show.